Welcome everybody to Technical Division episode 4. This is the Forex weekly series held every Friday, talking to you about the technical analysis for all the currency pairs in the market and also looking at some of the economic news for the upcoming week and how that will affect some of the pairs. I'm going to start off today with talking about our membership. Now, on the 28th of August, you will be able to purchase our Forex course, which we'll talk to you about right now. So this is our website. I'm just going to click on membership section, and right here you can see all of the content that you'll be given. So first of all, you'll be talked through a training course, the basics of Forex, how to become an intermediate Forex trader, and finally how to become an expert Forex trader. You'll learn how to analyze the markets, and you'll learn strategies for trading. We're going to hold weekly webinars exclusively for students and put them on to the website. That's just going to be critiquing analysis, going over bits that maybe students don't understand, critiquing some of the finer points of the chart analysis. Also, we're going to be doing Q&As where students can ask me anything about Forex, how to set up their account or anything of the sort. We're going to have an access to a community of traders, so we're going to build an entourage, and you'll be added into a Telegram group where we'll be sharing our analysis, sharing our thoughts on the week ahead, just so you don't feel alone whilst you're trading. You've got that community of traders around you. You'll also be given social media contact to, obviously, for us, for if you want to ask any questions, and that'll be part of the Telegram. We're also going to add in a section of psychology because we feel that's very important for trading, especially in the modern era. How to manage your risk and how to use external sources, especially books, which type of books relate to trading, and how you can increase your knowledge of psychology and how that can help you in the markets. So as I said, membership goes live August 28th. There's an email right there if you want to email me for more details, or contact me via any other source. Okay, so as I said, Technical Division, it is a weekly series where we talk about the technical charts. We walk over charts from different currency pairs, and we analyze them as to where we think they'll go for the week to come. Okay, so today what we're going to do is go over 3 different currency pairs. In the last week, we've entered 3 trades on 3 different currency pairs, and we've had 3 winners, which has been a very good week for us. So the currency pairs were AUDUSD, which is Australian dollar, US dollar, pound JPY, which is British pound, Japanese yen, and EURUSD, euro, US dollar. So those are the 3 trades we took this week, and those are the 3 charts we're going to look at today. So if you are interested in learning how to trade the Forex markets, I definitely recommend you take our course. You'll move, even if you have no experience in the Forex markets. If you're purely beginner, you've never looked at a chart in your life, there's no worries there. You can easily go through our course and become an expert if you put the hard work in. Okay, so we're going to start today with going over the first currency pair, which is going to be AUDUSD, Australian dollar, US dollar. Let's jump straight into it. So this week, as I said, we entered long, which basically means we predicted that this currency pair would increase in price. We went long on Tuesday this week, I think it was, and it ended up being a 5 pip win. Now, I was quite satisfied. I was quite glad about this because when we entered the trade, we analysed where we think the best possible entry is, and I believe the entry was around this black point here. It was around this point here. However, as you can see, price came down a little bit, and at one point we were 52 pips down. Our stop loss was 70 pips. However, this slight rally here over these few days helped us out quite a lot. And today, before non-farm payroll, we actually closed our trade out for a 5 pip win. So bearing in mind, for the majority of the week, we were in a drawdown for this trade to finish off break even near enough, to finish off in positive, which is pretty good, because I feel with this trade, especially in the first part of the week, the dollar saw a little bit of strength. That's why this pair moved bearish, and then in the last 2 days, maybe Wednesday and maybe a Thursday and Friday, we saw a bit more bullish movement, and then we stopped out. Okay, we're going to go over what our bias for the week ahead now. So, as you can see on the right hand side, this is how we analyze at the trading division. We've got, you can see monthly and weekly. This basically means support and resistance levels. We'll teach you all about how to do that within our course. Okay, so earlier on in July, we spoke about this area here, and we were expecting support to be held on this monthly candle, on this monthly this line here, and support was held twice there, which was pretty good. And we expected a move forward, a counter trend pullback, and a move forward up again, and then possibly using that weekly as support for a further move. However, this is how it played out. We rejected the weekly. We rejected this point here back in the 27th of July. So that wasn't too bad. We rejected it as we thought we would, but we rejected it once again on the 1st of August, right there. And since then we've came in a bearish movement. We're still bullish for this pair, and our prediction for this week is for price to retouch this level, this monthly area of support, to retest that, and to move up towards that weekly level of 0.80345. This will mean it's touched. If this is correct, it'll sort of touch it 3 times, and hopefully it'll break down that level a little bit more. It'll weaken it, because this is what happens when support resistance is touched, and it's touched a lot of times. It becomes weaker and weaker, and hopefully then it'll break through. However, as I just said there, it can become weaker, and this area's been tested. This monthly support has been tested twice, maybe 3 or 4 times, and once again here. So our bias is bullish for this pair, and we will put our necks on the line and say we're bullish for this pair. We'll post it on our Instagram account. However, in terms of trades for this week for this pair, I think we'll hold off until maybe Tuesday or Wednesday, just to see what the kind of idea is. Because if price does break through this level, then we've probably seen more bearish movement, maybe up until this point here, because we're retesting that engulfing, that bullish engulfing pattern. So we may see a move and down to there if we break this monthly level of support, and that's another 120 pips. So we're going to wait until Tuesday or Wednesday to see if we can get an entry on this trade. But our bias, we're putting it out there, our bias is for support held there, a move up through to the weekly, which is about 130 pips higher, and then further bullish movement after that, maybe using this weekly level as support, and continuing on our journey forward. However, we'll wait for that to all happen. At the moment, we're just purely looking at this move up to the weekly, and then we'll see where we go from there. Okay, so we'll move on to pound JPY now. Now, as we spoke about earlier on, this is the trade we took. It looks like we've got stopped out, but actually we rode this up here. Let's cancel that off. So we entered on the 1st, which was Tuesday, and as you can see with this pair, especially on the 4-hour time frame, it's been in a bit of a consolidation zone. Now, it started off in a bullish uptrend. It rejected that level 3 times, the level of the weekly resistance of 147.197. Now, as I said in the previous chart, when a support and resistance is touched a certain amount of times, it becomes weaker and weaker and weaker. It's kind of like the ozone layer surrounding the sun. If CO2 emissions constantly penetrating that, constantly surrounding it, it's going to become weaker, and this is exactly what support and resistance does. Once it's touched a numerous amount of times, it becomes weaker and weaker, thinner and thinner, and then it can be broken. Okay, so 1, 2, 3 times on this weekly level. That's why we had the target of this level again here, because we felt like price could move up again, and then we could break through it once for all. However, we entered on Tuesday, as I said. We moved up here, we rode it up. I think we were comfortably in 100 pips, I think. Around 100 pips. Around 100 pips there in profit. And we knew that upcoming Bank of England interest rate decision was due. And therefore, on Thursday before noon, we exited the trade around this point. We took our 100 pips and we ran. The reason why we did this is because this is what you can see in front of you is our risk and reward. So our risk was 50 pips. Our reward was 145 pips. We were 100 pips off, so you could say we're only 45 pips away from our target. Why don't we just hold out, see what the economic news does, and risk it. Let's just risk it. However, it's not the best idea, because we were 100 pips up. We worked all of the week to gain that 100 pips. Why would we throw it away just because we're predicting some economic news? And as we can see here, this candle at 10 a.m. Well, it's at noon, but the 4-hour candle, it was bearish because the interest rate was kept at 0.25% by the Bank of England. Therefore, we saw bearish movement for the pound yen all the way through our stop loss. So this candle, this one candle, 4-hour candle, moved 180 pips. I mean, it's insane. We were 100 pips up on the trade. This is why we got out. Okay, so my recommendation to you would be, at the start of the week, we always go over economic news. Obviously, on a Friday in technical division, we go over economic news, which we will do later on. And it's very important to look over this economic news, because if you were entering a trade like we were, you've done all your risk management like we did. You've analysed all the charts. It all looks cozy. But then, if you didn't know about the economic news, you would have got stopped out here, and you would have lost your 100 pips, and you would have been down 50 pips. Okay. So we got out because we always knew we were going to get out before. We were just hoping it would meet targets before the news came out, but it's no worries. We took 100 pips, and we're happy with that. Okay. So let's just cancel this off now. Okay, so this makes it a little bit more frustrating, because this candle, if this candle moves up to the weekly as we thought, we could see we were expecting more bullish movement to test this daily candle, maybe use that as support, and further continue our trend upwards. However, because now it is retested back down it's a lot of consolidation. We've had a lot of consolidation in this pair across this period. It is very choppy. It's up and down, not really understanding what it's doing, and therefore it makes it quite difficult to make a prediction for the next week as to where we think it will move. Okay, similar to this trade here, Aussie, we are kind of sitting on our heels a little bit. We're just monitoring it, and honestly, our bias is neutral at this point. Our bias is completely neutral. We've just got to see how this pair plays out over the next week, because, as I said, it's in consolidation, which means it's in choppiness. It's neither trending. It's neither in an uptrend or a downtrend. It's purely trending sideways, you could call it. So it makes it a little bit annoying, but we'll monitor this pair over the next few days. Maybe on Wednesday or Thursday we'll have an update for you. But for now, because it didn't hold support there as well, it didn't hold this level very well. It broke through this level quite a few times, and if it held this level like it did for the Aussie, these two here held, then we'd be more inclined to say a bullish bias. But because it broke, it may be bearish now and use this daily level as resistance and move further down. And the next point would probably be around the 142.5 mark. But for now, we're just going to keep an open mind, neutral bias, and yeah, we'll see how it plays out. Okay. Last pair we're going to look over today is EURUSD. Okay. So here's another one we looked at. We entered this week. Okay. So as you can see, EURUSD has been in a nice trend since probably since about April this year. I mean, it's been a beautiful bullish trend, making high lows, high highs, high lows. So as we got to this point here, this was the crucial area. This monthly resistance, as highlighted there, which is 1.17 1.17140. So this was a crucial level because Euro finally broke out of the 2-year resistance. And this daily area we noted as an area of potential support. So we expected price to break through this level, retest as it has done there. We had a 2-pip drawdown, which was excellent. We entered at 1.17875, and what was the low for that candle? So yeah, we had a 875, a 2.5 pip drawdown, which is it's minuscule. We put our risk reward out there. We said 50 pip stop loss, 150 pip reward, and then we were expecting price to find that daily support and ride up the wave up towards there, and it pretty much did. It rode up to there. Today we were 92 pips up, and just like the trade on pound yen, right there, we were 100 pips up on this trade, and we exited right there because we knew economic news was coming out. We'd done our homework and we were ready for it. We did exactly the same for the euro. 92 pips up at this point here. Non-farm payroll results were coming out at 1:30 PM GMT time, and we knew that was coming out, so we closed our position at 92 pip win. right there, I think it was about 11:30 in the morning. We closed it out, and as you can see, it was the correct decision, because if we didn't close it out, our 92 pips would now be 5 pips. So very good decision there. Happy with that. Now we can cancel that trade off. We took 92 pips. Satisfied. As for further movements for the euro for the next week, let's have a look. Okay, so as I said, this daily level here was found as support. Now this tiny little wick here, this lowest point of this candle, as I said, it was only a 2.5 pip drawdown. Now this shows that this area where it's touched, when we spoke about it earlier, we spoke about an area. If an area is touched many times, then it can become weaker and weaker. However, in this scenario, this line, this daily line of support, so what I'm saying is that this green zone has not been tested. It's been tested once with a small wick. Okay, it's not like this area of the Australian dollar where it's been tested by multiple candles, multiple wicks, all across the board there. This euro has merely been tested by one low wick, okay? Which means the daily support level is still very, very strong. Think about the ozone layer again, okay? If there's only one carbon atom which goes up towards the ozone layer is not going to be, it's not even going to feel it, okay? It's going to be partially damaged by a tiny bit damage, and this is exactly what happens here, because it's only been touched once, maybe 10%, maybe it's been thinned by 10%, and now what we expect is it to hold strong again for a further move up, okay? Now, targets. Let's have a look. Okay, so right here we put in a bearish engulfing, which means that this bullish candle here, this bullish candle right there, is followed by a bearish candle which is bigger. It's much bigger than the previous bullish candle. So a bearish engulfing pattern means that we may find resistance around this area. Okay, and we can mark this off exactly correctly by finding the close of that, which is there. Now, this will be our first target, no doubt about it, which is 95 pips higher up. Okay, so this is our first target for this week. And then, as I said before, resistance can find itself as support later on. What we would expect is we would expect a rejection of some sort, and then we'd hope of a further bullish movement, a pullback into previous resistance found as support now, and a move further up. Okay, but for now we are purely looking at this first move, this first move up, this first push forward after we find strong support around this daily zone. Okay, now if this does not happen, if we don't find support around this daily zone, what happens there? Okay, because remember, it is only a daily zone. It is not. So in the ranking order, monthly is stronger, weekly is second strongest, daily is third strongest. We talk about this in our support and resistance video in our Forex course. So if this doesn't hold, the next idea would be for it to move down here. Put that back to there, and to hold support in this zone. Okay, so we are still looking bullish for the euro. these are the two kind of options. So we have this option here. We have option 1 highlighted in red, and option 2 highlighted in black. Okay, but I would look at option 1 as the more favourable for now. We'll probably post option 1 on Instagram just because it looks a little bit stronger. We'll probably wait till 6 PM till markets are closed to put it on Instagram, and then we'll make our decision whether to enter a trade on euro. Over the weekend we'll analyse it again, and maybe on Monday we'll have a look at a possible entry, probably bullish, and then we'll update you guys. Okay, so the technicals are only 80% maybe of what we do here. We also got to keep an eye on economic news, as I said, in the GJ trade and the euro trade, because it can have a massive impact on the price action for each currency pair. So if you go over to myfxbook.com, you can check out the economic calendar for the week to come, and I'm just going to walk you through it now. I've had a quick preview of it already, and we have minor economic news for the whole week. So it's a very quiet week, which is it's not that good, because we like a little bit of economic news just to spice things up a little bit, you could say, but it doesn't matter. We'll see how it goes. We may have opportunities anyway. So starting on Monday the 7th of August, we've got FOMC member Kashkari speaking. Won't have a massive impact, if I'm honest. As we keep going down there, this is probably the biggest economic news of the week. The current account result in Japan. So keep an eye on that. High impact news Tuesday at just 12:50 AM in the morning. That's GMT time. So if you've got any Japanese pairs, if you're holding any Japanese pairs over Monday night through to Tuesday morning, just keep an eye on that and make sure you put a stop on. Maybe you want to hold off for the especially the pound yen just till Tuesday afternoon maybe. Okay, so continuing on. Yeah, we've just got medium and low impact rest of the day, so that's okay. Won't have an impact at all. Inflation report hearings, it won't have a huge impact. Keep an eye on it though. For the rest of into Thursday, as I said, medium, all low impact. Initial jobless claims, just keep an eye on that. It may move between probably 10 to 20, maximum 25 pips. It's not going to be huge, so you may be able to keep your position open during that period. On to Friday, and then we've got some consumer price index in the US and Kashkari speaking again. As I said, this won't move massively either, 20 to 30 pips maximum, but just keep an eye on it. So we've got the Japanese earlier in the week on Tuesday, and then we've got on Friday we've got consumer price index from US, so it's pretty quiet week. Okay, that's pretty much that wraps up for today's episode. As I said, we spoke about technical analysis today. We spoke about the economic news. We spoke about our membership. If you want to head over to thetradingvision.com, check out our membership content and all that's in store. We spoke about obviously all the economic news, and we don't just leave you out to dry. We talk about the economic news every single day, and we highlight the main important topics, the main policies and decisions, and we put them in a nice article for you on our website every single week. We put it on Instagram. So this week we had the Bank of England interest rate decision, non-farm payroll, Aussie interest rate decision. That was the National Reserve Bank, National Bank of Australia, and will European news affect the rally, Aussie highs, so things like that. So if you're unsure what non-farm payroll means, you can go onto this article, have a look at that. If you're unsure how the Bank of England will affect the interest rate, you can have a look at that. So let's just click into non-farm payroll quickly. So read about that, and I've just put a little segment on the technicals at the bottom. How will it affect the technicals? I've done that for pretty much everyone. So if you want to learn more about economic news, different economic topics, and how it will impact your technical pairs, then check out the website latest news. So that pretty much wraps it up for today. Thanks for listening to Technical Division episode 4. I'm going to be putting all this onto I'll put some posts up onto Instagram, so go ahead and follow our Instagram account, which is at the Trading Division. Right there, go ahead and follow that. And that's pretty much a wrap up for this week. Had a good week trading this week, and I hope you all did too. We'll strive to have a better week next week, even better week maybe, or exactly the same. And I hope you do too. So enjoy all our content. Enjoy the free content which we offer on our website and on our Instagram account. Enjoy this free video on YouTube going over the technicals, and if you are interested in learning more about the Forex markets, of course, stay tuned for August the 28th. And be ready to work hard. Alright, I'm going to wrap this up now. Thanks for listening. I'll see you on Instagram. I'll see you next Friday. I'll see you whenever I see you next. Thanks for listening. Bye.